Mr. Lacker, we have been watching the markets gyrate tremendously over the last couple of weeks. Stems from problems initially in Europe, Greece, concerns about Spain and Portugal, etc. Has that changed in any way your outlook for the U.S. economy?
Yeah, so it caused me to shave a point or two, a tenth or two, off my growth forecast for this year. That's what I think the effect's likely to be, that order of magnitude, if things play out the way I think is most likely. It also raises the profile of some risks, some downside risks. Europe's facing real tough fiscal challenges. They have a lot of choices in how they resolve that. There's going to be uncertainty until markets know how they're going to resolve that, and that could go smoothly or it could go less than perfectly smooth. The hiccups along the way could cause some shocks that maybe have a larger effect on growth. But so far, I think the most likely outcome is that it's going to be a tenth or two on GDP growth this year.
A lot of people have a hard time seeing how countries with limited growth prospects and high debt levels can avoid default. Are you really concerned about that?
I think that's a legitimate question to pose, but there still is the capability of resolving it through fiscal consolidation and adjustment without having to default on debt. The harder question is the credibility about your fiscal plan going forward. You know, what's the next 5 years, 10 years of your fiscal cash flow going to look like? Are you going to be able to support debt without having it grow very rapidly relative to GDP? And that's the hard part for any fiscal adjustment program.